How are you?
Hey, I'm good. What's up?
Not much. Just here doing an introduction for our very first live town hall MTA/PLP event.
Yeah, I'm expecting 3,500 people to be there.
Okay, cool.
On Zoom.
Cool. Yeah. Yeah, I hope anyone shows up,
It should be good. I think it'll be a lot of fun.
All right. Well, let's get into it.
All right. Welcome, everybody, to the first live episode recording of a podcast, but also it's kind of a group chat.
Sure. It's a PLP MTA crossover event, which we've never done before. So thank you to everyone who's participating.
We have a lot of people here. I don't know how many. And Blaine is going to explain, I think, how we're going to go through this, right?
Sure. So the way this came about is I put out a poll yesterday to get a little feedback on the podcast. And at the very end, it was like, what could we do better to better serve the community? And a lot of people said that they wanted info for very, very beginning trading. So put together some stuff for that. And I also, there's so much about trading that I don't know that I thought I would poll my people and get help that way. And then I was like, we should just do a crossover event because there's just so much I don't know. So I thought we could start by Justin, you and me and Kate going through the beginning of the outline and talking just generally about beginning trading, and then quickly we'll exhaust what we know about it and can bring in the rest of the crew. So we have a ton of people from MTA, educators, department heads here. And if we have already predetermined who can speak to certain questions. However, if you have knowledge on a certain question and want to talk about it and haven't already said that you want to speak, if you could maybe just put in the chat that you have something to say, then we could call on you. Cool? All right. So also in the chat, I've put a link to all my favorite trading books, and that basically the whole first part of this course is from this book. Oh, it's backward, but it's called The Complete Penny Stock Course. And when I first started trading, I maybe kind of embarrassing, but I will tell you that I got really hooked into that I should do the Tim Sykes course. And I applied to be one of his millionaire mentor, whatever students. And I got an interview with the Tim Sykes person, and they said that it would be like $3,000 to get into that program. But they were like, you seem like you'd be a good trader. And I was like, okay, let me think about it. And then got off the phone and was like, that is more than I really want to start trading with, not to even mention taking the course. So I did buy this book, and it is all of Tim Sykes' lessons written by one of his students. And it gave me a very, very good handle on trading, specifically trading penny stocks. It goes through all the basics in a very succinct way. So, if you like Tim Sykes or don't like Tim Sykes, I really do recommend this as a textbook type way to get into trading. My other favorite books, A Complete Guide to Volume Price Analysis, which if you listen to the Broda episode of the Penny Lane Pod, that's his favorite book. Love it. New Market Wizards, which is Conversations with America's Top Traders. I really love that for just trading mentality. And if you're not trading, it's fun to kind of live and breathe trading anyway. So it's just a fun way to sort of read about trading. And then Trading in the Zone is my favorite book. It's done more to help me than any other trading book. And I really could not recommend it more. So if you haven't read one of those things, check out the chat. And then the next things are all from that Penny Stocks book by Tim Sykes. Kate, do you have the Google Drive pulled up?
I do.
Would you want to walk us through those things? And then maybe Kate or Justin and I could talk about whether or not we think that those are good traits for a trader?
Yes. So walk through basic personality traits of a good trader.
Yes.
I can kick you guys off because especially I don't know if I have all of these things. So let's see if you guys have all these things. So number one, discipline, emotional stability, balanced level of self-confidence, determination, conviction, and decision-making ability, acceptance of being wrong, able to accept losses and forget about them. That one seems tough. Absolute commitment. This is not a sprint, it's a marathon. And if you can't commit to spending hours and hours of researching and learning and putting in screen time before you risk your money, then this probably isn't for you.
Justin, do you have anything to expound upon there?
Yeah, I want to ask a question actually real quick, and I would like to poll the group, and if somebody wants to speak up, that'd be great. So the last one, if you can't commit to spending hours and hours of researching and learning and putting in screen time before you risk your money, then this probably isn't for you. But we do talk a lot about paying market tuition and really learning by doing. So my question is, do people agree with that, where you should spend hours and hours before you trade? Or is the best way to trade, the best way to learn is diving right in? I mean, I did not paper trade. So I'm curious if anybody wants to comment on that and swear by one way or the other.
If you have an answer, just go ahead and speak up. You don't have to put it in the chat.
Yeah. Just
let it rip. Tell us who you are.
What's up, guys? This is Emu.
Hi. Hi.
How are you?
Good. How are you? Welcome.
I'm
Welcome
amazing.
to the Penny Lane Pod.
Thank you. It's a pleasure to be here and hang out with you guys. It's such a blast.
We're so happy to have you.
In response to that, I would say the word hours and hours is probably misleading. I think the way you should probably approach that is work on a system of some kind that you can practice in paper trading. And once you start to get results that you're happy with, that you're willing to say, hey, if this was real money, I would be really happy with these results. Then you can start to risk a little bit of money. And if the emotions are not getting in the way of the same results, or not changing the results, then you can start to scale up. That's how I would approach that. It's not necessarily an amount of time as much as it is a good understanding of why price is going in a certain direction and why you should or should not be in the trade. That would be my opinion on that.
I think that's really good advice. I did paper trade for about 2 months. Justin, you didn't, right?
I did not. No, I didn't paper trade at all. I jumped right in. Not huge to start out with, but I did jump in and just start trading to try to understand the fundamentals of trading specific stocks in the market. So I don't know. I think that's I think there's two ways you can go with that. I don't know that it's a hard and fast rule. I don't know. Does anyone else think that that's just stupid? Please paper trade.
Quentin here, just a first time listener.
Hi, welcome.
So I've been doing this for about a year now, with pretty decent success. I think you should definitely at least try to just get your feet wet with it at first. Just risk your money, minimal risk. Obviously, everyone's new here, so you're probably starting a day job. You're already on a day job, whatever, too. So you should do it as when you have time to. Like, don't rush anything at all. Like like you said, Justin, it's going to take hours and hours of learning new stuff. I mean, there's even new traders have been doing stuff for 10 years that are still learning new stuff every day.
Yeah.
I think there's a lot of people who trade regularly and very successfully who use paper trading to like back test new ideas or whatever, try out new things too.
Yeah.
Yeah.
That's a great answer. And I do like, so Mike said, if you do not want to paper trade, which he did not, just use a small amount of money. He calls it beer money. It's like walking around money. So I think most people are past that, right? You're already trading, especially if you're in this room. So I want to go to one that I think is really hard to understand or get to a point. Go
Justin, Callum wants to talk. And Fathor's here. Our good old Penny Lane interviewee.
Yes.
Welcome. Anyway, Callum has been all like, I don't want to come on the podcast. I'm not ready. Da, da, da. Callum, freaking talk to us. You're great at talking.
Hello.
Hello.
So one thing for me, and Lane, you'll know this from myself, like I'm a big believer in trading with low risk amounts when especially for me when I've been through my learning phase. So what I like to do is, especially for myself, is I would put a couple £100 in the account, obviously, and then trade to my risk, because one thing about paper trading for me is I didn't like the effect that I knew I could do something where it didn't have a consequence at the end of it. I'd prefer to actually trade with money and practice risk management, which we'll touch on later on in the episode. But for me, like I say, personally, I'd rather load a little bit of small capital onto my account, try it, because I'm a big believer in the trial and error in the market. Otherwise, you'll never learn. But yeah, that's just my 2 cents on it.
Thank you. Justin, you like the rush. You like the adrenaline of trading. I would think that paper trading would not appeal to you at all. Kate,
Not in the least bit.
Kate, what do you think? Do you think Justin?
I'm going to go ahead and say that's definitely not his thing. He likes to play hard and fast, and if it's a paper trail, it's not going to be quite as exciting for him.
He's trying to make money.
Yes, he's going fast.
The next thing I have on my outline is what kind of money do you need to start? But I think we're past that.
Yeah. Bianca wants to weigh in.
Ooh, Bianca.
Hi, yes, this is Bianca. I just figured I'd add on, I guess, to my preference and my experience with respect to paper trading and trading with real capital. The one upside that I did find to paper trading, which I only did it for a couple of weeks, is that if, when you're opening a new broker, you want to get the feel of it, et cetera, et cetera. I'm all for paper trading. If that feels comfortable for anybody new and starting, definitely go for it. However, the only downfalls one of the downfalls that I found is the share amounts, as Callum had touched base. And secondly, there's usually a lag time with executing your trade. So for example, Webull has about a 15-second lag, like delay, versus, which I found to be more useful for me is, let's just say I trade like with 1 share to 2 shares, like a baby amount, like using real capital. I hope that makes sense and that helps anybody.
For sure. Thank you.
It does. I want to ask a question though. If you're paper trading or not, it doesn't matter for this question. One of these traits was about conviction and decision-making ability. I'm gonna be honest with you. I don't always feel that confident in everything I do. I don't know if you do, Blaine. I'd like for you to answer that. Do you have conviction in every trade that you make? And of course, the answer is if you don't, you should make that trade. But I do anyway. I don't. How do you get to a point where you have conviction and the utmost confidence in what the heck you're doing?
I think I do have conviction in all of my trades. Like there's things I look for, whether it be candles or volume or news or momentum or what have you, or just like looking at the chart and it breaking out of some pattern. But I can usually tell you why I can always tell you why I took the trade. I don't think I'm giving myself enough credit. Yeah, I have a lot of conviction, but I know I could be wrong. Like obviously all trades can be wrong, but yeah.
Yeah, it's gonna go up or down. Does anyone else want to weigh in on conviction and how you feel that you arrived at it, or do you just fake it and tell yourself you have conviction in order to make a trade, or do you honestly feel all the time 110% positive before you make it? Of course, it can work against you, but
I can answer this one.
Oh, Broda.
Yeah, I didn't think I need to introduce myself. I'm the only one with a Scottish accent. So yeah, and like conviction comes obviously it's easier when you've been trading for a long time because you've seen things happen before, and that's part of your conviction. But definitely as a newer trader, and definitely when I was starting out, I was setting rules for myself in terms of it has to meet this, and this, and I needed to have 3 rules to be able to take a trade. So whether it was news or whether it was relative volume, whether it was the pattern set up, I had to have 3 things And that would be my conviction. And if it didn't work, I'd note them down. I'd be like, this didn't work because of this. And this was my reason why I took the trade. And this is why it went against me. And that was how I'd learn what of those 3 things should be in those rules the next time I look at a trade. And then every single time stuff would be filtered out, stuff would be added on. And eventually you get to the stage where you see those things, you don't have to write them down, you don't have to think about them. It's just in your head, this is the setup I need. And you can buy it. You put your risk in, as we'll go on to later on. And then even if it does go against you, you don't lose much, but you know what's happened before and you know those things can work for you. So you can actually make the gains that you need. And that's what I use for conviction, is just making sure I've got at least 3 things that are going in my favor. And always looking at what can go against me as well in the same trade. And if the pros outweigh the cons, then I'll have conviction in it.
Thank you, Britta. Callum, if you can unmute and read what you said, just for those of us who are watching later or listening later.
Okay.
Yeah, sure. So risk management obviously ties into it, like got touched on, Justin, because when I'm looking at a trade and I have a pattern, I will always have a cut point below, and that cut point will always be suitable for my risk to reward, which we'll touch on later. But normally my risk to reward set will always be a 1 to 3. So I'll always be able to 3 times my entry. And if it doesn't work, I'll probably cut it a cent or 2 below where my line is. So even if you do take an L on the trade, you know that you've controlled that risk and you've had your own plan on it. So you can be 100% confident in it rather than just going, I'm just going to buy the dip. I'm just going to buy the dip. You know, you're stopped. You've got your plan set. So yeah, that's my view on that.
Cool. Thank you. Before we go on to the predetermined questions, I'm just going to throw this out there. Can anyone talk about journaling and if it helped you? Because we've interviewed a lot of traders and it does really help some people. And anyway, anyone want to talk about it?
It takes a lot of time.
It takes a lot of time.
And then to review it once you're done too. I mean, that's a lot. Mike.
Yeah, so it's Booch here. Can you hear me?
Hey, Booch. Welcome to the Penny Lane Pod.
Hey, this is fire. So yeah, journaling is awesome just for the sole fact of like, I literally, if you look through my journal entries, I call myself an idiot nonstop. Like I've gotten hammered on a couple swings in the last couple months where a couple bios didn't go my way and I should have saw it coming. Like there was no run up into data and I knew it would be a sell off in the data and I was just hoping and hoping and hoping. So when I journal, it's a lot of not really beating myself up. It's just more or less going, hey, why the hell did you take this trade? Like, what were you thinking? Like, come on, dude, like you're better than this, yada, yada, yada. And then I also praise myself too. If I take a trade where I have like super conviction in and I just straight kill it on that trade, I'm like, I'm like, you're the man, like go cook yourself up a steak tonight. Like you killed it. So that's when it comes to journaling. And I look back at those, like whenever I'm pissed off, I'm like, all right, well, you had a really good day that day. Like start doing that. Start looking for those A+ setups. Start having more conviction. Like stop taking stupid trades, basically. That's how journaling has helped me.
Yeah, I think that's really smart. I have listened to podcasts before where people say they use their journal to just get out all the bad thoughts they have about themselves. And that's because like we all do it, right? Like, oh, I chased, I did this, I'm an idiot, I should never do. Like I said to Brad earlier, I was talking to him and said, trading has taught me more about myself than anything else I've ever tried to do. Like it brings out all the worst thoughts that I have. So I think that's great.
Booch definitely
Booch, everyone loves you.
Yeah.
All right. Journaling rocks. You should do it, especially if you're feeling bad about yourself. We actually have here, I'm going to put this up. We have a affiliate situation with TraderSync, which we love. Like obviously no pressure ever, but I'm going to throw that up there. All right. Next on the outline, let's get into questions. Justin, do you want to read them and then you can call on the people behind them to answer them?
Definitely, but I'm definitely not going to say these names right. So when
That's
I don't,
okay. You
have to correct me.
I don't know how to say them. I just read them. And then...
No, what like whoever it is, whenever they come on, you just say, Justin, you're wrong. You're an idiot. It's Zico and not Zico. Got it?
Sure.
All right. Because that's the first one. First one is specific to a trading platform, which is fine. How do you set a trailing stop in Thinkorswim?
Cool. So you got it right. It is Zico. Hello, everybody.
Hey, Zico. How are you?
Great. How are you today?
Good. Thank you for coming on.
I am staying in from the storm, but all is well.
In New York, right? Okay.
Where the hurricane is somewhere?
So going into how to close a position using a stop loss, what was it? The trailing stop. So it's basically the same no matter if you're using the mobile platform or the desktop. You just have to go to the positions tab. Once you're there, let me just go to it on my own side. You go to a place where it says the standard order position. It might say market, it might say limit, stop. So you just scroll down to the bottom and put in trail stop. And what you want to do is there's different brackets you can do. So for instance, you can do it based on if it'll go up or down by a few points, if it'll go up and down by your position, or it's staggered. I usually just do it by, for instance, if I bought in at $7 and the stock is now $7.50 and I just want to secure my profit, I usually only do a trail stop in that situation, but I'll do it maybe a few cents away from where it is just to make sure I'm still in the move. So I'll put the trail stop at, let's say, 5 cents away from the current price. And that's just basically the only way to do it. It's the same thing on the mobile app is you just go to positions and you press close the trade, but you don't really close it. You just press on the option to go through the order of it.
Are you using that on most of your trades?
I use it. I used to use just general stops across the board. And then I stopped using stops and I started just using alerts on my trade. So if I have an alert above and below, my threshold. So for instance, on my risk or my reward. And then once I'm enough in the green, then I'll put a trailing stop on it.
Cool. All right. Next question. Kate, do you want to read it?
Yeah, I got it.
All right.
How do you know which news is big news and what is just positive news? And this is from Bianca and...
It's for Bianca.
For Bianca. Okay.
Yeah. And isn't it for someone else? There's a lot of people who want to talk about this. So let's just... Boba, are you here?
Yeah, I'm here. Can you hear me?
Yeah. Why don't you start?
All right.
Hi. Welcome to the podcast.
Hello.
Thank you for coming.
Great to be on. I love the podcast. You guys are awesome.
Oh, thank you.
So yeah, just to touch real quick on like what's big news versus and positive news versus how do you know if that's like worthy paying attention to? And it, like we talked about before, like it's a little different between like large caps and small caps. A lot of the times when good news, like for example, like positive data, or there's a new like merger and acquisition or some grants or something comes out for like the large caps, oftentimes those are already priced in. You won't see a whole lot of movement unless it's some kind of like groundbreaking news or it's related to a theme like COVID or EVs or at the time or whatever is going on in the market and the world at the time. When you come to small caps, that's when you have to pay attention to, maybe unfortunately, you have to pay attention to FinTwit and social media and things like that. See what people are talking about. A lot of the times, that's what will end up moving the most. You have to pay attention to the good news that doesn't get quote unquote found or paid attention to, because those are ones that you can also play as like all day kind of grinders. And those are the more quiet plays, less risky because they're not so volatile, because you don't have all that retail purchasing and selling of those tickers. And I know some of the people in MTA like to do that. I'll leave it at that.
Okay. Thank you for that answer. I have a question about that though. I know that there are certain like keywords sometimes in press releases that like, if it has this word, then it's more likely to get like run immediately.
Yeah.
Oh, wow. If this person wants to come in named Brad, do you think it's Brad?
Nah, ban them.
Oh, cool. Does anyone know what I'm talking about and know any of those?
Yeah, really quickly though, I would say one of the things that it really also depends, as Bo was mentioning about, is like for instance, market cap. So for instance, if you get a news headline that's something with $1 billion in it for a large cap, it probably won't move. Like he was probably priced in already. However, if it's something relative to a small cap and it's a purchase order of, $50 billion and the market cap is maybe only $3 billion, it's a long-term contract, that'll go. That's something that we've seen run in the past. And it's something that traders generally like to gravitate towards, just because it's something that's monetary and it's something that you can easily see kind of like what it means in terms of the company's goals. Some news comes out and you really just don't know what it really translates to in terms of trading. But if you see $1 billion, it means a lot of things for the company and it's growth for them.
Bianca, do you want to talk about news?
Sure. No, absolutely. I actually, leaving off as to what Bubba and who was speaking, I'm so sorry. I didn't catch the second person's name just talking.
That was Zico, but okay.
Oh, Zico. Okay, forgive me, please. No, it's just as what they were saying. Usually with these small cappers, big hedge funds, big wigs don't really give a damn about them. So when they start making their way up slowly on the gainers list, that actually gives us an advantage for ample time to actually search around should any PR had dropped, the reason why. What is the theme around this? What's the history of the stock? Was it a former runner? History on stocks repeat themselves time and time again. Is there range? What was that 52-week high? Usually the list that I'll normally see for these small caps to move, and even some fluff news at time. For example, normally you'll see them run on a price target quote or a buy rating, a change of CEO, announcements of debt closures. Those are more or less some fluffer news, but with these small caps, they do have a tendency to grind. Some recent and more frequent PRs that I would see that make these guys move are some investment agreements, closures of closures of some offerings for capital raises, some joint ventures, royalties and grants for funding, contracts for services. DPW is an example of that one. That was a former runner. Mergers and acquisitions, good ERs, some government contracts or some non-binding written agreements. Those are some common ones that I've seen run. So I hope that helps.
Yeah, for sure. Thank you.
You're welcome.
Ooh, Booch, this is interesting. Do you want to talk?
Yeah, so I'm primarily a swing trader. I know a lot of you guys don't swing trade or mostly trading on momentum, but when you're a swing trader, something that's really awesome to look out for on a fundamental standpoint is something that will add to the company's market cap, whether that be, like Bianca said, like something like a government contract or a grant or something of that nature, just something that makes the company's market cap increase. Because if the company then their shares outstanding and everything like that is trading below the market cap, then that's a pretty damn good deal in the end of the day, because that the company is going to be trading higher than that market cap at some point, and they have something brewing going on. So that's basically what I look for when I swing trade, is just something fundamentally that'll raise the company's market cap.
Right. And then at times, and this happens to me time and time again, and I'm a victim for being somewhat impatient, but news good PR will drop, but no one will know anything about it. And it'll take maybe all day or a day or two, even a week for it to actually run, for it to actually take notice.
Perfect. Thank you so much. Broda, I love what you said. I love the buzzword thing. Do you mind talking?
Yeah, of course. So it kind of follows on from what Zico was saying with the mention of billions. So we had a really good example of that a month or so ago with Emran. And obviously it just kept running off of the mention of the billions in their PR. But along the same lines as that is a mention of a large cap company and one of the famous large cap companies. So if you get mentioned with like an Uber, like we saw with Alf, or you get mentioned with like an Amazon or an Apple or a Microsoft, those are the buzzwords that algos will hit as well, because they'll look for those things and they'll hit them. And then obviously, as Bianca was saying, once we get that news that gives you a movement, you've got range on the chart, And you see where the charts actually is at and where it's sitting. If it's been shorted all the way down, you know the power that's now in there. If we can have like a float rotation or something at a new higher level, that's when the shorts will start to get scared and they'll start to cover. And that's where we end up getting the multi-day runners. But those buzzwords, whether it be billions or whether it be a large cap partnership or something like that, those are the ones that will really start to move a stock. And once it can hold its gains, that's where we get the really big range multi-day runners. But yeah, partnerships and mentions of big amounts of money, those are the real big buzzwords for me.
I like that a lot. And that's easy to remember too. So that's great. Gup.
All right, this is Gup.
Hi, Gup.
I'm just
welcome to the podcast.
Thank you. I'm just going to mention maybe the one thing I really know fundamentally, and it's because Mello has talked about a lot and Mello's not here to talk about. So I'll just throw it out there. But I know something Mello has mentioned, especially, when he's doing his long-term small cap swings, something that he loves to see, at least among the small caps, is when they start having really large debt to equity swaps. Like when people who have debts outstanding against the company exchange that debt instead for a piece of shares in the company or a piece of ownership of the company. Mello obviously likes to see that because then the people who company owes money to obviously have conviction that the company is going to increase in value so much so that they're willing to straight up trade their debt for some ownership in the company. So that's a big piece of fundamental that I've seen Mello mention a lot.
I want to poll the group though. You can just throw it in the chat. How do people get their news? How do you choose to get your news? Do you choose to get it through your trading platform in the news feed, or are people, Calum said Twitter? Just wondering, I mean, where people like to get their news from. I mean, I think everyone probably has their own particular, lots of Twitter handles. You guys find debt to equity swaps are posted on Twitter? See, there's the question. What's a good source to find debt to equity conversion? I mean, that has to come from the company, like from a SEC filing, right? There's a news bot in the Discord. Yeah. Or
Charting software.
Yeah.
Yeah. I get all my news on Twitter.
Everyone's saying that.
Mm-hmm. To be fair, though, we have a partnership with Benzinga and they do great news too, but I have
Gilmore beat you to that punch. Look at that. That's hilarious.
Whoa, this is a lot. A scanner on Twitter. That's fantastic. Next question.
You want me to hit it? Let's do it.
Yeah.
So how can you determine if it's a pullback or a change in trend when all the volume is above average? This is for Gup and Broda. And explain it to me like I'm 5. So is this over the course of, I mean, is it sustained increased volume over 1 day, 2 day, 3 days, a week? Is that how you just be real simple with it, please? Gup or Broda?
I think Broda is leaving me out here to start with this one, so I'll lead off and let him fill in the blanks. So first of all, as far as whether it's daily, weekly, et cetera, that's all going to depend on what time frame you're looking at and how you're looking to trade it. I mean, a momentum trade, obviously, an intraday trade is going to be different from short-term swing is going to be different from a long-term swing. But and I'll try to break this down however I can, as simply as I can. So essentially, if we're talking about going long, so we'll just talk about prices going up because I think that's the easiest default for people to imagine. If you're talking about prices going up, obviously we have a lot of patterns, something like a bull flag where you expect what people would call a low volume pullback, a large up shot followed by a little pullback of 1 or 2 periods of candles, whether or not you're looking at the 5 minute or the 1 minute, where volume is lowering. Obviously, this person's asking about, at least how I remember the question too, is they're asking about what happens when that sort of pullback is above average volume. Well, it's going to depend on the context. So without getting way too technical, larger patterns have smaller patterns within them, and each of those you can consider a structure. So when the smaller structure is going up and then starts pulling back, you really need to ask yourself where that pullback is going in the context of the larger structure. Just because you break structure on the smaller scale does not mean that you've broken the larger uptrend. What you need to ask yourself is, when do you form a lower high in the greater picture or in the greater structure? Speaking specifically to the volume aspect of that, because the volume price analysis is really the heart of this, and it's I think the heart of the question here. Just because the pullback retains above average volume does not necessarily mean that it invalidates the idea of a quote unquote low volume pullback. And that is to say, if you have something that the average 1 minute candle has 100,000 volume, and suddenly it's had 3 straight green candles with 1 million volume that have pushed it up in a large way, and then suddenly it has like a 400,000 candle that kind of pulls it back a little, and then a 300,000 candle that pulls it back a little, and then a 100,000 candle that pulls it back a little. I mean, the vast majority of those pullback candles were still above average volume, but compared to the volume that pushed it upward, that pushed price up, that volume is insignificant. And it tells you, along with things like reading the tape and understanding where you are in the structure, it tells you that selling pressure is not exactly coming in at a rate to be able to match the buying pressure that was underlying the original move in the first place. So it's a little bit of pattern recognition in terms of recognizing the smaller structures and the larger structures and where you are in the picture as a whole. And it's a little bit of volume price analysis and understanding what the volume is that's pushing price up and how the volume in the pullback compares to the volume that was pushing price up. If the volume in the pullback is lower than the volume that was pushing price up, ideally significantly lower, but lower, then I don't really care if that volume in the pullback is above average. It's nowhere close to the buying pressure represented by the volume that pushed the price up in the first place. Broda, what you think?
I didn't know you could talk that long about a high volume pullback. That's amazing.
I'm sorry. Yeah, I'm a lawyer by trade.
No. That's not what I mean.
Nailed that. That was amazing. I wish you talked a little bit more about 1 minute and 5 minute candles, but I'm gonna let it go.
What do you want me to talk about? How everybody should be using the one on some level?
Maybe, I love a good 1 minute candle. So I thought, my podcast, we could talk about a 1 minute candle.
If you don't use the 1 minute candle at all, something's wrong. That's what I'll say.
Perfect. Someone said they overlaid the 1 and the 5. I'd love to see that. That would be fascinating to me. But anyway, who do we have up next? Broda?
Yeah, that was a pretty good answer that from gut, wasn't it? You must have some good mentors.
I wonder who. I haven't talked to my mentors recently.
Yeah, so I mean, he nailed that answer. That was pretty much exactly what you want to see from a pullback and not a reversal, or not like an overall reversal in the stock. What I would kind of add to that is obviously that if someone is trading this, they need to know how to trade that. And obviously, if they've bought low and they've made that run up from the bull flag, if we go from Gup's analogy, and they've played the whole way up the flagpole. They're wanting to be locking in profits up there. They don't want to be going, oh, well, it might just be a small pullback and then it will keep going and I'll make 60, 100%. We don't play on hope. So you take your money out at the top. If you want to play around a core, that's fine. You can leave some core price down the bottom, and you can then average back in when you see signs that it might start continuing back upwards, and it'll follow that main trend and that macro trend. And we can actually follow the actual full structure of the play. But you don't want to be holding from that bottom level thinking, oh, it's just a small pullback, it's just a small bull flag and it'll keep going up, because it might just come back down. And when it starts turning round and you see that top in volume, which is kind of hard to explain, but I'm sure you could show them it or something. They can join MTA and I'll show them it. But when you see that, you should be taking some profits. You should always be locking in your profits and selling into the strength on the way up on the move. And then you can get back in at the bottom of that bull flag. If it looks like it's reversing, wait for it to bounce, wait to see if there's selling pressure still on that. You want to see some demand below it. So if it's getting pulled down, you want to see it get pushed back up towards the end of the candles, whether it be the 1, whether it be the 5. You want to see that demand coming back in, pushing it back up. You want to see it bounce, then form a higher low, and then you can average back in and play the next move. But you don't want to be holding that full length. You don't want to play that full move in the hope that it's going to go further. Because you can wait and look for those things that Gut was saying, but you might have already lost profits by the time you've noticed that it's a full-blown reversal. So you don't want to just kind of sit and wait on that one. But if you see it start to consolidate at a high level, you see a lower high, you see a lower high and then you see a lower low, shorts are going to hit that. And being someone that does hit it on short sometimes, I'd be playing short on that. So they will pull back. If you see big red candles coming in and then small green candles and big red candles, there's not enough demand there to push it back up. That's all selling pressure. No one wants to buy at the price it's at right now. So you should have been out already. And you want to wait for that reversal sign. You want to wait for an after lunch short squeeze or something you can play the next move. But you don't want to be holding on hope, just hoping that it's going to go higher. Even if you're only up $5, just lock it in.
Thanks, Broda. My favorite voice in MTA. Just keep talking.
Mine too.
All right. Callum, I do not have a drink today. Thank you for asking. It's a Sunday.
Bummer.
All right. Let's move on. Next question.
All right. I can take it. What tips could you give someone with a very small account? I'm going to definitely butcher this name. Who's supposed to answer it? It could be Cheatin, Chetin,
Chathan.
Chathan?
Yeah, Chathan.
Chathan.
Yeah, it's Chathan.
Chathan, man. I'm sorry. I apologize.
It's like Nathan, but with a C.
Got it. I'm sorry.
Cool. Well, welcome to the podcast. Thanks so much for coming. I can't wait to hear your answer.
Yeah, no problem. Could you repeat the question again? I'm sorry.
Yeah. What tips can you give someone with a very small account? So I guess not a small account, a very small account.
A very small account. Yeah. I at one point I had a pretty small account. I think there's not like one strategy or something I can point to and be like, yeah, do this and you'll be fine with a small account. I think more of what it comes down to is risk management, right? Like obviously, even if it's a very small account, don't be trading with money that you can't like afford to lose or something. Like if you need that money, don't trade with that. You're going to be upset when you like are down a couple dollars. Obviously you can't, everyone's going to be out there and be like, oh, you need to use like 10% of your account. You need to use like 20% of the account. But if you're running like a $500 account, let's say, or like $100 account, 10% is not a lot to be putting in a trade, right? So you really need to focus on creating a system per se. Like it doesn't have to be anything super strict, but it can just be like maybe types of trades you want to take or certain hours you want to take. Like you really need to just, if you want to build a small account and you want to be consistent with it, you need to have a system. That's the best way you do it, right? Like I wrote a thread on Twitter about my brother because he started off with a pretty small account. And I mean, all he did was he gave himself like a source. All he did, and he wouldn't like if the trade didn't work, he would cut it quick. And if it was working, he would let it ride. And he only used that couple months. He was over PDT from that small account. And he wasn't very experienced or anything. Like he was pretty new to it, and he did it. So I think if you come in with a system and a plan, and you just execute properly, and you don't you just let it work, you'll be good with a small account.
Thank you for your answer. Hey, Happy. Can I talk to you? Can you come on?
What's up?
Hi, friend. Can you talk to me about having, one night stands with your full account, and that's a way to grow your small account?
Yeah.
Yeah. Oh, if you guys have not heard Happy's episode of the Penny Lane Pod, he's big on the one night stand YOLO.
Yeah. So basically, this is just an overnight play, renamed into a one night stand because, who doesn't want to have fun? So obviously the PDT rule is in effect if you're not Callum. So you're going to have to find a way to essentially make money without using day trades. And Brad and Walrus always talk about the importance of overnights with growing an account. I mean, they've grown accounts like crazy percents just by doing overnight plays.
Okay, and so I do not mean to interrupt, but what are you looking for when you're looking for an overnight?
Yeah, so one thing that I look for a lot is constant volume after hours, and I want to see big buys right before close at like 7:58, 7:59, and I have to make sure the chart like goes intact with it too. Like Brad talks about the T+2 setups. We would love to see something like that forming. We would love to see it break like a major resistance in after hours or something like that and play the continuation upwards the next day. To me, I like to play overnights as a way to basically just set up a day trade for the next day without having to use a day trade. If I see like a great dip on something that I think might continue, I'll try to buy the dip after hours and overnight it. That way I don't have to waste a day trade the next day.
All right, and Happy, hit me with the best broker to use if you're full porting an overnight.
I mean, I like Webull with that because it opens at 4 a.m.
There you go.
Closes at 8. I know other brokers do too. I don't really know them off the top of my head, but yeah. So the main thing for me is consistent volume after hours, and then look for a major resistance to be broken on the daily chart, or something intraday. If it's been a multi-day runner, and you saw like a couple times it pull back off of like 25 or something, and it breaks 25 after hours, you might want to look to dip buy and see if that 25 turns into a support there. Because then that would be good for continuation.
Blaine, can I ask Happy another question? Because he's on the list, and I think while he's here, why don't we just have him keep going?
Let's hit it, Happy.
Best strategy. I think there's multiple ways you could probably answer this, but what's the best strategy for beginners to trade options? Context is, seems like the sentiment is that options are too risky, but I feel with a small account, you are able to grow your account quickly. And one big advantage is money settles the next day. I don't know if that's like looking for a true strategy or just what types of trades from an option standpoint. Either way, up to you.
Yeah, everyone always talks about options being more risky. For me, I look at it like anything else because there's ways that you can mitigate that risk. If you can lose 25 to 30% on an options play pretty quickly, then take smaller size. So it would be as if you're losing the same amount of money if you're going heavy in pennies, something like that. That's one thing that I do to mitigate risk is I take smaller size when playing options. It's all proportionate in my mind, I think, if you can manage your risk. But obviously options can be a very big way to grow your account because if you're a cash account, it settles the next day, and options leverages your money in a pretty crazy way. You can get these insane multi-bagger trades. But I think when I say that, it's important to realize stop going for home runs. People with small accounts, they're looking for that one trade that's going to change their account. And I can't say how many times that makes a winner turn into a loser because you're up 95% and not 100%. Are you crazy? Like if you're playing commons, you're going to sell that 10 out of 10 times. But because it's options, people get this mind frame like, oh, I could possibly hit a 500% gainer playing options. I just try to always compare it to playing commons, where commons I have no problem selling for 5%. So I think that's big too. But as far as specific strategies, to try and grow a small account for me through options, I pretty much strictly played weekly and daily breakouts, like longer term breakouts. I found this to be the highest percent winners as far as swings go. I mean, it depends on how big your count is for this part, but if you can buy a further out expiration, it's always safer, but they're going to cost more money. I think it would be safer like to take 2 further out contracts as opposed to getting 5 close to expiration contracts, just because it mitigates your risk. Growing your small account's all about mitigating risk.
What if you like that anxiety happy? You really just want to hold it for one day. You want to judge me?
Yeah, I'm only gonna judge you playing.
All right. Well,
or just go long on CCL.
All right. Thank you so much. I do want to, there's a really good question that Chathan was going to answer for us about paid rooms versus learning for free. Justin, would you read that question? Because I think everyone would like to know.
It appears that most guys who are big investors now had mentors who provided one-on-one mentoring. Any suggestions for such a thing right now, or if it doesn't matter anymore with social media access? I have heard others paying for access to trader rooms. Is it worth it?
You know, like obviously the difference now is we have a lot of information for free. But I still think if you are looking for like a mentor or something to give you like a one-on-one, sure, a paid room could help you, right? There's no guarantees, but I think if you're looking for purely alerts or purely like trade ideas and stuff, you can find all of that for free. You don't need to pay someone like monthly to find that. I mean, that's about it on my answer. Like, I think if you're looking for a mentor or something, sure, a paid room could be useful. But I think if you just, finding trade ideas and stuff, that stuff's free. Like all that stuff you can find online, Twitter, Reddit, Discord, like even just FinViz. Just there's so many ways to find a ticker you're looking for, or stocks. Like you don't have to pay anyone for that. But someone guiding you through like a mental process and stuff, sometimes you do need extra help. And I think at MTA we can help you with that for free, obviously. But sometimes if you find someone great that requires you to pay, hey, it's not like some taboo idea.
Chathan, thank you for that answer. Hey, Callum, are you there? Can you hit us with a good place to find information about trading on the internet? I'm laying you up here.
Oh, well, there is a certain Discord called MTA, Modern Trading Academy. Links in pretty much all of our Twitter bios. It's pretty easy to find, and you'll get very good help. We're active there at all times, including myself. I tried to be there as much as I can, and yeah, we'll help you out there, including Kate. I just seen we recruited her. So.
Yeah.
All right. And I think we only have a few minutes left, although I could talk to you guys all day, every day, which I do. But I'd love to do this again. But before we go, someone asked for the best piece of advice you ever received as a trader. I'm going to go first because it's my favorite thing and I love saying it. But one time I read somewhere that there are old traders and there are bold traders, but there are no old, bold traders, which I like. Anyway, please, someone else speak.
Hey, it's Boba again.
Hey, Boba.
Hey, just something that stuck with me. I think it was Jixer in the chat, in the Discord chat a few weeks ago. He said something that really stuck with me about, we talked about risk management earlier in the episode and playing with small money, beer money, what have you, before you really get, a groove and consistency. And, why trade with $1,000, $2,000, $10,000 before you really know what you're doing? Throw $100, $250 and just play with that. You don't need to lose thousands of dollars. Lose $100 here, $100 there. And that way you can really work on your execution, your consistency. And if you can grow $100 to $1,000, why can't you grow $1,000 to 10,000, 25,000, And that's something that really stuck with me and I'm working on.
Love it. And so true.
This is Gup. Broda stole mine in the chat. I was going to go ahead and shout him out and say that if you're a technical trader, and you look at charts and patterns, find the ugly first, is probably the number one piece of advice for technical trading I've ever gotten. And then I'll shout out a gaggle of folks, including Callum. I think it was encapsulated really well by some Twitter post I said, but Callum really is the embodiment for it in MTA. The Twitter post just said, if you're too good for a $40 profit like trade, then screw you, basically. Like, and the pleasantry of that message aside, the point it's making is really important, and that is you should never be too good to take a winning trade, to take a green trade. If it's a 2% trade, if it's a 10% trade, either way, like, nobody went broke taking profits. So to the extent that you aren't embracing scaling out of trades on pops and taking what the market gives you there, you need to start doing that. Stop trying to hit home runs. Stop trying to wait for the 50% move. Take the 5% move, because with your $100 account, while you're learning and getting it together, 5% is $5 if you full ported. But imagine what that's going to be someday when your account size has grown and when you've compounded, and what that 5% will finally be. For some people, like, for people who are really at the top of the food chain, a 2% trade can make a month. It can make a year for them. So why is a 2% trade too good for you? And Callum is the king of that in MTA, and in terms of just about every time Callum's in a trade, it doesn't matter where that stock is priced. Like, as soon as it gets a pop, Callum's scaling, and he does it shamelessly, and he moves his stop up to entry. Cannot lose, will not lose. So those are the two.
Gup, you killed it. I love it. Happy, you have something, don't you?
Yeah, I do. I was going to say for Rogue Trader to go if he wants, just so.
Oh, yeah, Rogue.
Get his.
Talk.
Can you guys hear me?
Yeah. Hi. Welcome to the
Yeah.
podcast.
So Gup, totally took what I was going to say and ran so much further with it. So shout out to him. But the best tip that I got was from Adelon. If she's out there listening, shout out her. She's a fantastic trader. So the tip was, if you are in the green and you see an amount that if it was red, negative, you would cut the trade, then cut it green. And it's really that simple.
Totally. She said that on PGIR, I think.
Yep.
Stuck in my head forever and ever and ever. Like, if I'm up $20, like, would I rather have $20 or lose $20?
Yeah. And I think it's pretty basic, simple to follow. You don't have to overanalyze it. Just, if you would be upset down $50 and you're green $50, take it.
Yep. So. Well, thank you for saying it, and welcome.
Thank you for having me.
Guys, there's so much stuff in the chat. I can't read it all. Does anyone else want to say something? I can't go through and call.
I'm ready now.
All right, Happy.
Best advice ever. Charts don't lie.
That's your own advice.
Yeah, well, it took a lot of learning for it to sink in, but never get caught in those furu plays that they promise a crazy price target if you just realize that charts don't lie.
Did we hit all the questions, Justin?
We did leave one out for Callum, which I know he's going to be sad about. It's risk management, but it wasn't.
We need to do that. So, let me say one other piece of advice I got. One time I lost $3,000. I lost $3,000 in a day, and I was crying, and it was horrible. And I called Justin and told him, and he said, well, we're either winning or we're learning. Like, you're right.
I said that?
Yeah. Think about it all the time.
That's pretty good.
Wise words, Justin. Way to go.
We're winning or we're learning.
That's pretty good. So you want to let Callum roll into risk management?
Callum just said he'd rather talk about it on his upcoming episode. So
in showbiz, that's
fine.
great cliffhanger.
After this episode, the next episode is Berkey. Everyone loves Berkey. Berkey spends all day on voice. We can't wait to have him. So thank you all for listening to the podcast. Thank you all for your expertise. I really, really hope we can do it again. And happy Sunday. Go MTA.
That was fun.
Thank you.
Thank you.
Good
Thanks
luck
for the
this
fun.
week.
Thanks. This was so fun. Let's get it tomorrow.
Yeah. Make some
All
money.
right. Bye, guys.
Thanks, guys. Bye.
Thank you. Have a great night.
Blaine, what do you think of the first live town hall?
I loved it. I'm feeling very alive. You know what I mean? Like that was just it. I feel great. Loved all that information. I got to go back and re-listen to it.
So, two things real quick. First thing, one of the pieces of feedback you got is that our intros are too long. So we kept our intro to 45 seconds, but the outro, we can just go as long as we want.
Just shut it off. If you don't want to hear us, you're done. You got everything you needed.
Yeah, that's exactly right.
Yeah.
So you spent a lot of time putting together the layout and format of the town hall and how we would talk to each other, how people would ask and answer questions. How do you think it went organizationally?
I thought it went well. I thought everyone really respected everyone's time. The only person who interrupted was me, and I interrupted Happy. So, sorry, Happy.
So I want to make a trading joke. We say in trading, you don't have to hit home runs, just hit singles and doubles.
Yeah, base hits.
I would call that Zoom a home run.
Yeah, I think it was definitely a home run.
It was amazing. So I think we have to do that again. We should do that again. And it was really informative. This will be a well listened to episode. There's just a lot of different people with a lot of different skill sets, but a whole bunch of knowledge.
Yeah, for sure.
A lot to share.
Yep. I think we've got to do it again because if we're being totally honest, I think you and I may have reached our peak of being able to teach. Like the questions were coming in and it was like how to set a trailing stop loss. And I was like, couldn't tell you.
Don't use those.
Yeah.
I think we can continue to show people that we're just as bad as them at trading. Like, you know, for solidarity, let me listen to a podcast where other people make the same dumb mistakes I do.
Totally.
Yeah.
Yeah.
I think so. Well, that was fun.
Yeah, I can't wait for Berkey's episode coming out on Thursday.
Do you want to tease that? Is there a particular topic?
So Berkey, his name's Berkey Turkey. He controls the entire voice channel on MTA. So he's there from like 8:30 to 4:30 every day, talking through plays, what he sees. He's just really doing a lot of work. So I think he'll be interesting to chat with.
A true moderator's moderator?
Yeah, he also loves Harry Potter. So we have that in common.
Well, we're a Harry Potter family.
Harry Potter fam.
We have custom Harry Potter books on our bookshelves.
Yeah, you'll have to show him.
Yeah.
Oh, look, there's Kate.
Yeah. Kate made it back for the outro.
Hey, Kate.
That's it.
I just saw all the text messages. Sorry, guys.
All right.
Kate, did you thumbs up or thumbs down? Did you thumbs up or down? Did you think that was a good up?
Thumbs up. Everyone's
Cool.
so nice.
They're so
They're the nicest people.
They're so nice.
And it sounds like I'm joining MTA. So
yeah, according to Callum.
Gang's all here.
So we'll see everybody on the Berkey Turkey episode.
All right. Joel Edwards, producer, we love you. Thank you for everything you do. Chesley Lowe, love the banjo music. And like, subscribe, share. See you later.
I'm not going to do it. Swing.
No!